very warm welcome to yet another CNBC Africa special. On this particular occasion, we are talking mining, particularly mining in Rwanda. As early as 1912, the Belgian explorers, who came to be known miners, were looking into the potential and what could be actually unearthed from Rwanda as a country as we have come to know it today. Fast forward to 2017, we're seeing receipts from Rwanda alone, the mining sector, that is north of $200 million US. But this, with the big plan that has been unveiled by the government of Rwanda, could be north of 1.5 billion. Helping us to understand this particular deliberation and conversation and potential for mining in Rwanda as a whole is, to my left, Honorable Francis Gatare, CEO of the Rwanda Mining Board. Good to have you. Right next to him is Professor Nelly Musimeri. Very good to have you, Professor. And to my extreme left is Dr. Kato Chimbugwe. Pleasure to have all of you. First of all, if we were to look at 2016, very turbulent year for anyone who was actually exporting commodities. Rwanda, no exception. Of course, the three T's, tin, tungsten, and tantalum. But many of the conversations usually go around the notion that this is pro-cyclical. Yes, there's going to be highs, there's going to be lows, but how can a country like Rwanda guard herself in future, maybe in the near term, or even the long term, from this cyclical movement of commodities? Let me start with you, Honorable.
Thank you very much, Arnold, for having me. The phenomenon of price fluctuations of commodities, particularly mineral, but also agricultural commodities, is a common one. And often it's affected by global dynamics. And it's very difficult for a single country to really alter the dynamics of price fluctuations on the global market. However, two things usually are helpful. And for Rwanda, both are conspiring to help us in the sector. One is usually the cost of production. For the mining sector in Rwanda, we are particularly fortunate that the geology of Rwanda makes mining very cost effective because the minerals are not very deep, far off the ground. The minerals tend to be accessible on the hills and for a long time also have been accessible with minimum capital equipment. While this has been very good for sustaining the mining sector competitive, it hasn't been as useful when it comes to optimization and scaling up in production, which is where we are coming in now to address in terms of addressing the capital shortfalls, investments in the mining sector in order to leverage the turnaround that we are witnessing this year.
Right. Professor, I want to bring you in here because if we are to look at the overall deposits for ores across the world, crude oil, natural gas, Africa is north of 12% globally. But when it comes to exporting that final product, we actually do have less than 1%. Yeah. Tell me, a country like Rwanda, maybe let me speak on an East African perspective here. How can we move to the next frontier? We have had lots of talk about value addition, but how do we move away from the rhetoric and actually do more?
Yeah. So for me, everything starts with government policy, because unless government takes a deliberate stance and a deliberate decision to actually make sure that they localize more of the value of their mineral assets, then it's not going to happen. Remembering that our minerals are someone else's raw material for their own industry. So the people that are actually importing our minerals for their own industry are not going to give them up very easily. So it's up to us as African countries to deliberately put in place policies and strategies that ensure that when investors come here, there's conditions around value adding and beneficiation locally. I think it starts with policy, and then everything else actually then falls into place. Because policy allows for government to put in place all the supporting things to make the environment right.
Right. Dr. Chimbugwe, she mentions localizing here, but often development partners make so many decisions away from the content, away from the context that is actually on the ground? Is this something that maybe DFID is looking to address in many of the programs that they do roll out in the future?
Yeah, I think when you look at the program and the portfolio of programs that developed to support economic growth here in Rwanda, we do recognize the importance of value addition, because value addition domestically benefits some of the poorest people, but benefits citizens of that particular country. And therefore, for us, it's important to ensure that a lot of the returns are actually internalized locally with the communities or the countries that actually own that particular resource. And I think Professor Montemeri is right when she highlights the point that I think it's government policy and a government position that will drive that effort to try and increase the level of beneficiation that takes place, whether it's in the mining sector or any other sector. And I think with that type of a guidance, and with many African countries looking at trying to benefit more and make sure their citizens actually benefit from those natural resources, it's important that we as donor partners support that effort and work with the governments to deliver to those particular aims.
Right. Honorable Gatari, if anyone listened to my introduction just a few minutes ago, they would be blown away by moving from where we are, $200 million US maybe for 2014, 2015, to 1.5 billion, right? In a few years, should I say. Capacity is one thing that we are seeing, or rather the lack of it, that we are seeing across Rwanda. Much of the mining is very artisan. Tell me, with the two of you, especially, the Honorable Gatari and Professor, how is this going to be addressed? I want to hear from the two of you, because one is actually feeding into the other cup.
I'll start. The aspiration of the mining sector in Rwanda is to double the value of the output every 2 years. This is possible, we believe, partly because of the low base at which we are starting. But also it's possible because of the changing environment and the government investments that we are putting into accelerating the transformation of the mining sector. Let me talk about the low base. Currently exporting on average $200 million worth of minerals over the last 5 years, with very minimum private investment into the sector. What we are seeing is that with slight investment into the mining sector, you increase the productivity almost threefold. Let's face it, today the recovery rate of most of the mining companies in Rwanda is still below 50%. What it means is that even at the mine gate, by increasing the recovery rate technologies alone, you can double the productivity of each mine. Imagine when you add equipment then for increasing the scale-up of the productivity of each single mine. It's possible to more than quadruple every couple of years by additional investment. What is government doing to facilitate this? 3 things government is doing. One is we're working with our partners like DFID and others to remove any of the existing bottlenecks, structural bottlenecks within the sector to create a good business environment, to create the most competitive legal and regulatory environment, and also to create a support mechanism, especially for the small and artisanal miners that continue to dominate the sector. Secondly, government has been investing in exploration work, which has in the past been the major obstacle for the mining companies. And as a result, we are making new discoveries, whether it's with the more dominant traditional minerals, the so-called 3Ts, which is tin, tungsten, and tantalum, as well as gold and gemstones. But we're also making new discoveries that will diversify our mineral export products. And so all this together, we believe, is going to consolidate in adding to the ambitious targets that we have set for our country.
Professor Nelly?
Yeah, okay. I think the issue of skills is something very important to me because I'm a teacher. And I think one of the things that I see happening and that I see the board, I see Rwanda, and I see also in other African countries, is the idea of making sure that you feed the goose that lays the golden egg, right? So the revenues that are coming from the mining sector, if you're going to sustain the mining sector, have to be plowed back. What some countries have done, I'll give you an example. I think Australia, on the African continent, we have South Africa. They charge a skills levy to all mining operators. In fact, it's a skills levy that applies to all sectors. But for mining, it goes to an authority whose role is to make sure that the skills that are required by the sector are actually taken care of. So I see that as something that going forward, the Rwanda mining sector and the Rwanda government could actually think about, that you want to keep feeding the goose that lays the golden egg. But also more broadly, the issue around skills is that mineral resources are a one-off chance. Once they're mined and exported to Asia for smelting and refining, they're gone, right? You can't renew them. They're a non-renewable asset. So apart from the skills feeding straight into the mining sector, it's also about lateral linkages, side linkages, to create opportunities beyond the mineral resource. And I think that is an opportunity that also I see the government of Rwanda pursuing, that use this asset as an opportunity that is a one-off, where you can actually create other industries, you can actually create skills that are portable, that can actually be applied to other sectors. And many countries have actually done that based on natural resources, where they use their natural resources as a basis for industrialization. And I think Rwanda is a great opportunity to actually follow that route.
Right. Dr. Chimbugwe, listening to Honorable Gatari here earlier on, he mentioned that fragmentation has been an issue over the years, at least when it comes to the mining sector. And there needs to be a lot more cooperation between at least the miners to come together and form more cooperatives. Traditionally, we've seen DFID go the direction, financing trademark and go towards promotion of trade, at least cross-border trade, and starting small. Is this a change in the status quo for DFID?
No, not really, because if you look at our trademark program, which you know Arnold quite well, part of that focus is not only addressing issues at the macro level in terms of regional EAC legislation, but also working down at the really micro level with the traders who are trading across those borders. Very, very important not to leave them out of that equation. This program does both things. It does address the macro level kind of investment climate reforms that are required that will be able to attract and drive investment to the sector, but at the same time is also looking at testing a model that will help artisanal miners, better aggregate in order for them to deliver the benefits. And I think what the CEO highlighted in the launch today was this issue of this fragmentation where everybody managed to get a license. Who wanted one got a license. Many of them may not have had the skills, the capacity, or the financial capability to mine the correct way. And as a result, as he highlighted, returns in terms of what people are actually benefiting are below that 30% mark. And I think what is really, really important in this program is making sure we address the kind of reforms that are needed to attract investors here, to ensure that people who are there can access finance, which is a critical component of the equation, but also clearly develop a model that will be able to centralize, collate, all these small artisanal miners into a cohesive unit that delivers not only from a productive standpoint, but also they can be viable as a collective, as opposed to at the moment where individually, those individual operations are not viable. And especially in the downturn of the market, it has exposed that inefficiency within the marketplace. And as a result, many of these operations are just not viable and are never ever going to deliver on the vision.
Let's talk about the fact that, yes, you're talking about the downturn, but if at all we do account for close to 8% when it comes to overall production, at least for the ores, we are looking at diamond right now and at a low last seen in January 2016. Oil, no exception. WTI right now is at $56 a barrel. We could go on about the copper. Okay, copper is making a recovery, but this cyclical movement, doesn't it go for a two-pronged approach? Yes, the government is doing what it can on one end, but also safeguards on the other end to make sure that in case of this downturn and the cyclical movement, there is a safeguard for many of these miners, for the private sector. I want to hear your thoughts on the same. Honorable, let me start with you.
Correct. The cyclical nature of the global commodity prices obviously hurts every economy that has a high dependence on commodities. And that translates into lost jobs and lost revenues at the household level, in addition to lost revenues at the national level. At the household level, though, because of the nature of the mining sector in Rwanda, households are quick to spread their risk, because many are farmers, many also own plots of land, many have livelihoods that are independent of mining sector. What we have been seeing in the past is that in times of boom like this, more labor is drawn into the mining sector, and obviously because of their perceived increased revenue. But their households remain attached to the land that they own or have depended on for a long time. And this will not be any different. What we are going to see in the future, perhaps, which is what we are exploring, is to have a lot more cooperative movements that amalgamate their small mining concessions, that will bring larger groups of people to work together, that will have other types of work that support the mining sector, some of which may live beyond the transitions that will happen during the fluctuations. The second thing that we are doing is trying to get as much as possible the value addition or processing that Professor Mutemeri was talking about, so that even in times of downswing of the prices, you can still have the processing part of the value chain employing workers. Because let's face it, any cycle that we have seen usually rebounds in no more than 2 years. Fortunately, now we are at the upturn of the cycle, and we can expect at least another 2 to 3 years of that direction if we go by all the projections that you see on the global market space. Yeah.
Professor Mutemeri, safeguards as.
Yeah. So for me, I think I look at safeguards in terms of safeguarding the economy. I can't think of specific examples where stability funds, in terms of countries, have been applied to mining economies, but it's very common in the oil and gas sector to have stability funds.
Because I was going to go with Norway, which has set up a stability fund and also an investment fund that is north of a...
Exactly, and it's investing in mining in Africa, and I worked for a company that had that fund investing in it. And the other side is the impact of the downturn on the people, right? So I think one of the things that, and I think the little that I've become exposed to Rwanda, I remember the times when I was doing certification audits here, I picked up that there is a special social security fund that allows somebody to have health, access to basic health. So I think when you talk about downturn and the impact that it has on workers and then on their families, I think issues around social security are very important, because during the good times, right, the people are able to contribute their taxes, little as they may be. But when they're unemployed because there's been a downturn and they're still able to access just enough to be able to survive, to have health care, to be able to send their children to school, I think it's a very important aspect of actually safeguards, social safeguards around against economic downturn.
Right. Doctor, of course the investment from DFID is north of £4.5 million, but Is there a sense that there is a program here that is going to be eco-friendly for Rwanda as a whole? We can go on about examples in Africa from South Sudan to the Niger Delta, where initially these looked like very viable projects, and fast forward to where we are right now, people can actually go out to fetch water without soot coming back in their pants. Is this something that actually is looking to be addressed with the DFID program here?
Without a doubt. And, when you're talking about safeguards, safeguards are very, very important in the way the UK government takes them seriously, particularly environmental issues around child labour. These are things that pose a reputational risk to DFID, to British taxpayers whose hard-earned money is being invested in this particular program. So for me, I think one of the key issues that we're working with, particularly in the design of the program, was to make sure that the environmental issues are front and center, the child safeguarding issues are front and center, the health and safety concerns as well. We must talk about that. The standards of what's happening in those mines, that those are also front and center in terms of what we're ensuring that we help mitigate and reduce those particular costs to the particular program, but also to the wider Rwandan economy. So for me, I think environmental standards are critical because we know, any type of mining does have an environmental impact. The key is to make sure that, as you are, for example, undertaking your recovery in terms of sluicing, it's done in a way that you're not destroying the watershed and destroying millions of other people's lives in the way that, the kind of mining practices as well as the processing practices. The health and safety standards, you want to make sure that the people who have to go down those tunnels are doing so responsibly, have the right type of skill sets to do it. As you've heard of so many
collapsing mines,
collapsing mines in different countries around the world, and we want to make sure that those issues are tackled. And this is why a key component of the program, as Professor Nelly presented today, is making sure that those issues around environmental, social, you name it, safeguards are clearly addressed. Otherwise, when we call the program sustainable mining development, it must really mean sustainable, not only from an environmental perspective, but also individual people's rights to good health and safety in their working environment.
Now, it's not very often that I sit on a panel with leading economists in the land, but I came across a very interesting statistic that left me very baffled. If we're to look at the expenditure on the mining scene per square kilometer for Canada, Latin America, and the Americas, it is close to $65 per square kilometer, right? Contrast to Africa, we're looking at $5 per square kilometer. What is the problem here? We do have the potential, but is it safe to say that maybe the political will is not there? What is the problem just holding back that expenditure into the sector that we know is very viable? Maybe I could start with you.
Correct. If you look at that spending per square kilometer, which is in terms of exploration, a lot of it tends to be by private companies. What we are seeing in our economies is that our economies and the mining sectors have suffered underinvestment. And in fact, in some cases, we have witnessed de-investments, meaning the withdrawal of investments from the mining sector. And that has created space for small and artisanal miners with minimal foreign direct investment into the sectors. So what that has created is a loophole or a gap in exploration spending. It's a reason why in Rwanda now, the government is coming in to bridge that gap. We realize that the government needs to carry out some of the initial exploration work up to a point where information available can demonstrate potential presence of mineral resources. Yes. And then from there, we can engage private companies to carry it forward. Yeah. We believe that that's probably going to be the only working model for governments in Africa to increase investments in exploration. One must also be mindful that with all the discoveries that we make, there comes demand for infrastructure investments, whether it's in terms of electricity, in terms of road networks, in terms of water networks, to also support the mining and processing operations. And so mining investments from the public sector cannot stop. It can only continue if we are going to continue to realize the growth aspirations that we wish to have.
Right. I want to hear your thoughts on this, Professor.
Okay. So as I was listening to the Honourable speaking, several things were going through my mind. One, I think on the last point that he raised around infrastructure, I think mineral resources are probably one of the few assets that can actually attract the kind of rents that can actually pay for infrastructure that, if properly planned, can actually become public infrastructure, not the mine to port kind of rail that we used to see in colonial times, but infrastructure that actually serves the population that it actually goes through. And mining is one of those few activities that can actually attract that kind of investment in terms of interest. You see mining companies putting up a bank of generators driven by diesel. It means they actually have, it means the rents that are attracted by mining actually have the capacity to drive the high levels of investment in infrastructure. I think that's the main point that I actually wanted to raise around the issue of infrastructure.
Doctor, I could see you itching to add to that.
I think just to add on to that point, I think when you look at some of these more mature countries in terms of even their mature mining sectors, the information or the data is there to support private sector investment coming in. What is missing in many of our countries, yes, exploration was done back in the 1920s. That data, in many instances, is not available to governments to be able then to pitch that to private sector in a way that they can then see that there's actually potential in this sector. Sometimes exploration is not done, and if it's done, maybe even the information is not made available to private sector. And I think the idea that Honorable Gatari was quite right that a lot of that investment, you're talking about $65 per square kilometers, is private sector investment. And they will only come if you address the issue of information asymmetry. You ensure you've provided all the relevant information they need in order for them to make that key decision. Remember, the initial exploration done by the state is simply to show you there is potential. The next step forward is for the private sector then to invest heavily in proving the resource, and therefore making sure that this is a recoverable resource that they can then, extract and benefit not only themselves in terms, because they've got to be viable, but the country as a whole. And I think what is ailing the African continent is this lack of information. And what we're trying to address in this particular program is to ensure that all that information is made available, not only the regulatory side, but also the data that drives the key decisions that any mining company will make. If you don't have anything as a baseline, you cannot expect somebody to come and say that we are going to invest in 3Ts in Rwanda if you don't have the information about the basics, about the resource that's available.
Fascinating insights, Dr. Chimbugwe. Allow me to just put a pause on this conversation. If you've just joined us, we are talking mining in Rwanda, a country synonymous with the 3Ts, plus the gold and the gemstones, but tin, tungsten, tantalum, and a very esteemed panel of analysts. On my left, we do have Honorable Francis Gatari, right next to him, Professor Mutemeri Nelly, and right to my extreme left, Dr. Kato Chimbugwe.
A very timely conversation around the mining sector here in Rwanda as the government is looking to morph the sector beyond the $200 million contribution to the economy annually and see it north of $1.5 billion by 2024. Arnold Segawa, this is CNBC Africa First in Business Worldwide.